All right, so what we're looking at right here is something called a CRT, and that stands for candle range theory. And I'm telling you right now, this is one of those concepts that once it clicks, you will never look at the markets the same again. And this is what actually changed everything for me and helped me become a profitable trader. Now, I'm going to try to keep this as simple as possible because a lot of people love to overcomplicate this. Price does three things and only three things: it builds, it traps, and then it moves. Some people like to call this accumulation, manipulation, and distribution, but it's all the same idea. And once you truly understand that, you'll start to understand how the market moves. Now, in this example, we're looking at a higher time frame range. This is a 1 hour candle. You've got a high and you've got a low, and nothing really matters until one of those sides gets taken. Because the moment price takes a high or takes the low, that's when the game starts. That's when the CRT begins to form, right? So in this case, the 1 hour candle closes and a new one begins. All you're doing is you're waiting for price to take the previous 1 hour high or the previous 1 hour low, and then you're waiting for your setup to form. Now, it's not just the 1 hour candle that has a CRT. Every time frame has a CRT. The 4 hour, the daily, the 15 minute. You can find a CRT on any time frame. But for this example, we are on the 1 hour candle. Now you can see the high and the low is liquidity on both ends. Then comes the trap. In this example, price pushes above the high, and this is where a lot of traders get caught because it looks like a breakout. It looks strong, it looks like it's going to continue, but it's not. And yes, it does often break out because price is just seeking liquidity elsewhere. I'm not saying that it doesn't, but that's not how I trade. I trade with the idea that it's designed to pull you in, it's designed to stop you out, and that's the trap. That's the manipulation. And then the real move happens. Price reverses and delivers in the opposite direction. So if price runs the high, the real move is down. If price runs a low, the real move is up. That's pretty simple, right? This is what changed everything for me. I stopped chasing breakouts and I started waiting for the trap because the move comes after, not before. So what you're seeing on the higher time frame is just a fractal of what's actually happening underneath. And when you drop to the lower time frame, like the 5 minute, you can literally see it happen in real time. You can see price stepping down and taking the opposite end of the range, which is in this case the previous 1 hour low. That's the build, the trap, and then the move over and over again. Same patterns every time frame. And this is where you stop guessing because now you're not reacting to price. You understand where it's going and what it's doing. You wait for liquidity to be taken, and then you wait for the trap. And then you take the move that comes after. Now let's go to the charts and I'll show you guys exactly what this looks like in the real market conditions. Okay, so looking at the 1 hour chart, you can see that we have this 1 hour candle right here. So let's go ahead and mark out the high and the low of that 1 hour candle. So we have our 1 hour high, and then we have our 1 hour low right there. So there's our range. Now all we're doing is we're just waiting for one of these high or low to get swept, and then we're going to target the opposing end of the range. So we're taking a reversal based off of what uh, either the high or the low gets swept first, right? So let's go ahead and drop down to the 1 minute. Some people like to use the 5 minute. Some people like to use the 2 or 3 minute. For the sake of this video, I'm just going to drop down to the 1 minute. That way I can show you a little bit more of a sniper entry that you can take once this hourly low or hourly high gets swept, right? So let's go ahead and advance the chart a little bit. And as you can see right there that we did come down and take out this hourly low with our new opening hourly candle, right? So I'm not doing anything yet. I'm just being patient and I'm going to wait. Okay, as you can see, we did come down again, and in that process, we did close the candle and we created a 1 minute fair value gap right here. And if you're not familiar with fair value gaps or inverse fair value gaps, I'll have to make another video about that. For the sake of this video, I'm just showing you the concept of a CRT, how you take your entries off of that. It all depends. There's multiple ways you can do it. I like to take it with a inverse fair value gap. So basically we want price to come up, a candle to close above this 1 minute fair value gap, and then that's where we're going to take our entry. So still not doing anything yet, just being patient, just marking everything out, and we're going to see what it does. Okay, going down further. Okay, so right there, we did in fact inverse the 1 minute fair value gap. So that tells me that the bulls are in control, and we are going to take an entry off of that based off of our CRT, which is our hourly low gets swept, and then we have an inverse fair value gap right there for our entry. And then that's where we're going to go ahead and take our long. We're going to target the opposing end of the range, and then we'll do stop losses either down at the recent swing low, or you can keep it a little tighter and go just right below maybe this candle right here, or the low of the previous hourly low, and then we'll go from there. Let's see what happens. And as you can see right there, the trade did play out in our favor. So to review, we have our hourly candle high and low. We have the new hourly candle opening. We swept the previous hourly low, then we came back up. We inversed the 1 minute fair value gap. That was our entry. Our take profit was the opposing end of the hourly candle. And then also over here is where you could have put stops at break even, because it did come up and sweep this buy side liquidity up there. Okay, so pretty simple. Let's go ahead and look at another example on a different time frame. Okay, so looking at the 30-minute chart now, you can see that we have this 30-minute candle. So we'll go ahead and same thing, we'll mark out the highs. So we'll mark this one 30-minute high, and then we'll mark this one 30-minute low. Okay, so now we have our range. Same thing, we'll drop down to the 1 minute time frame, and we're just going to wait for some kind of an entry. We're just waiting for one of these key levels to get swept. Key level meaning you have your low and your high. So let's see what happens first. Okay, so right there we did come down, we did take out the 30-minute low. So now I'm getting interested in a reversal if we get our entry signal. Okay, so right here we did come down a little further, and then we also have this 1 minute fair value gap that it created. So now I'm really interested in this trade if we do inverse this 1 minute fair value gap, because that tells me that the bulls are in control after taking out this sell side liquidity, which is the 30-minute low. Okay, so we did inverse the 1 minute fair value gap. So now I'm going to go ahead and place my entry long right there. And I'll just put a buy limit right there above the candle that inversed the 1 minute fair value gap. And for this one, I'll do stops down below the recent swing low, and we'll see what happens. And as you can see right there, the trade did play out based off of the idea of a CRT where it came down, it took out an area of interest, which in this case is the 30-minute low. We came down further, we did inverse this 1 minute fair value gap, and then we pushed higher, and our target was the opposing end of the 30-minute range. So the concept is pretty simple, and you can see that it works on multiple time frames, and it does work. Um, there's multiple entries that you can take. Some people like to wait until it gets kind of above this area and then they go long. They like to wait for a break and a retest. I mean, there's so many ways that you can take an entry off of that. I particularly like to use the inverse fair value gap method, but it's all the same concept based off of a CRT, which is a candle range theory, taking out the opposing end of the range. So there is something else I want to show you guys. This is an indicator that I developed. It's called the 2Trades Pro, and it does automatically mark out the 30-minute highs and lows, 1 hour highs and lows. It's fully customizable. You can choose the 4 hour, and then you can do any custom time frame. You can do a 12 hour, 8 hour, 2 hour. You can find a CRT on any time frame of your choice. So it works good for day trading, scalping, swing trading, anything like that. And the cool thing about this is it does print out my entry signal, which is the inverse fair value gap. So you can see right there after I advance the chart, it did print out the entry, a retest entry if you want to do that. And this is the trade that I just showed you, obviously, but I'll show you for the sake of the indicator that it does work. So came down, swept the 30-minute and 1 hour low that it already printed, and then it printed the entry signal based off of the sweep of the 30-minute and 1 hour low. And then you can see after we advance the chart that it does work. And then right there is where you would have taken your 30-minute take profit. So it's really cool. If you guys want to check that out, I'm running a 3-day free trial on it right now. I also have a free course you can check out. And I'll leave the link in the description in this video. So I hope that helps, guys, and take care.